Good morning, everybody. Today is the 21st day of January 2022. It's Friday. Happy weekend, everybody. My name is Heritage Adisa, market analyst at HotForex. And quickly, as usual, we'll check through the markets, see what the dominant sentiment is, see the opportunities, and then how we can take advantage of it. But please remember that this is just a communication material, and nothing in this communication should be considered as investment advice or investment recommendation. Users acknowledge that investments in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. What we have this morning in terms of the overall market environment, right, is a more clear risk of market sentiment across board, where we have risk assets generally lagging. We have safe haven currencies and assets generally strengthened as well. I had this written down earlier. I said equities continue to have a bad week, down mostly across board, right? High beta currencies are down. The Aussie, the Kiwi lagging amongst major FX. We have JPY, CHF leading amongst the major FX, right? Risk assets generally are just down, and we have even yields are also lower heading into the weekend. Equities trade lower. US 500 is down about 4.4%, right? This week, cleared out technical levels, key support zones, the 100-day moving average, the 50-day moving average down. We look at it now, in a bit. Oil is also lower, right? Also cleared key hourly moving averages as well, and also cleared key support level around $85.75 per barrel level. VIX has also poked the 25, level as well. We'll look at that, shortly. And then in terms of strengths and weaknesses, we have CHF leading the majors. Cumulative trend about 2.75% as at a few minutes ago. We have JPY follow. We have Euro also strengthening in such environment, and then we have AUD, NZD, and CAD lagging amongst the major FX. Right. Quickly, let's just look at the charts and then see what we have. All right. Give me a second. All right. So while this comes up, quickly. Okay, good. Now we look at the US 500. We've talked about this now for a couple of sessions back, where we said the rally up has been solid, and then deep buyers have been really, really resilient. And every time we had that pullback, right, we've had them step back in, and then they step back in to buy every single time. Now this time around, though, we're trading at all-time highs, right, a couple of weeks back. That's late last year, right? We're trading at all-time highs, and then obviously at levels like we've always talked about profit taking at some point, just that deep buyers have always been super resilient. Now, this was the first key level of support we expected deep buyers to hold, right? This couldn't hold. We had a 50-day moving average, couldn't hold. We had another major support level going back as far back as mid of around September 2021 as well, but it still couldn't hold. Cleared out the 100-day moving average, and now we've moved lower as well, clearing out the 50 retracement level from the lows of October to the highs, to the all-time highs. Cleared out the 50. Now we've cleared out the 61.8. I mean, it just keeps breaking all levels of support. And then even with all of this, it just bodes more, care, more fear in markets. One of the things that you want to also water back in mind is the reason why we're seeing all of this downside is, there's more and more calls for central bank tightening across board. We already know the Fed is going to do that. We already have NZD already doing that, right? There's now calls for BOE to also do more in the next meeting. Even the RBA calls for them to do more as well. And then a couple of weeks back, even though the BOJ more or less did not mention anything like that, there was talk about the BOJ being more worried about inflation as well, even from that side. So all of this doesn't bode well for equities. Why? Because tightening monetary policy squeezes out growth, reduces growth potentials, cools down growth in the economy. And obviously that is not good for businesses, neither is it good for stock prices or even equities in general. So that's what we are seeing now. But even with all of that, the downside we've seen this week, for example, on US 500, right, is down about 4.4%. That's quite a lot, right? And then, yes, we could say we've cleared out key levels to the downside. Notwithstanding, we still need to be very, very, mindful, because today is Friday. And Friday always comes the risk of profit taking. So, I mean, after 4.4% drop in the week, I mean, it wouldn't be that much of a surprise. Okay, here we're saying 4.21%, right? Down in the week, it wouldn't be that much of a surprise to see some form of profit taking. As a matter of fact, we even have key previous support levels that could be retested even for the week. So in as much as it's risk off, I wouldn't be, overly, I won't be taking all the bricks off, even if I want to take for the downside on the likes of equities, right? And then there's a similar story across board right? Even for Nasdaq as well, we're seeing downside, clearing out the hourly moving average, the daily moving averages rather, key ones, and then heading for support level, key one as well, around the 114,500 level. Now, you look at other assets like the VIX, for example. The VIX has also been pushing higher for the week, right? Strong moves this week, about 28.8%, upside this week already, and then if you look at what we've had, right, we talked about the 20 level as a key barometer. Now we've poked the 25 level. Now, this is also saying a lot about fear markets, saying a lot about it's not good for equities at all, right? But another thing I want to also have a back of your mind is over the last couple of, the last couple of times that we had a test of this level, right? Let's just show you something. Okay, quickly. Now, the last 5 times that we've poked the 25 level, I'm going back as far back as May 2021, later one to another time again in September, and then late November, early December, twice as well in December, and now this point. At every point in time where we've had that, except the one that we had, in November, we've always almost immediately pulled back below it. So it's also something you also want to watch out for. Yes, we could talk about profit taking in equities. Even the big VIX has also shown over time that at this level, there's almost always a pullback, a retracement on this particular one. So that is another thing to also have at the back of your mind. For bonds, and we've seen the bond markets really give us, right? We've seen the bond markets just quickly loading up good, keeping a more flat mode to start the day. I mean, yeah, overall it's still overly supported coming from yesterday as well as the previous day, Wednesday, keeping all the gains coming. But so far we could look at this as profit taking. We could look at this as pullbacks rather, right? If you look at, let's see how this is taking some time to load. Okay, give me a second. All right, good. Now we could see a pullback towards the previous lows going back to early January for this year, right? So that's also another thing to have at the back of your mind. For oil itself, oil has also been showing, level of resilience as well over the last couple of sessions. But now in the last couple of weeks now, right? But in the last 1 week, 2 weeks, we've seen pullbacks from oil. It initially was a pullback, right? Looking at what we've had, very light pullback. We said deep buyers always still very much in play, But in recent time, we've cleared out. I mean, key moving up, the key hourly moving averages here, the 51st and then the 100 finally, and then we've even cleared out the 83.75 level, which was key resistance going back to 14th of January, as well as far back as even middle of October in 2021. So with all of this technical setup being cleared out to the downside, I mean, it makes it more vulnerable for risk assets. But even with all of this, I'm still very much watchful. I'm still being very, very much picky because it's Friday, and obviously with Friday comes profit taking, the risk in heading into the weekend, especially when we have the Federal Reserve meeting next week. So there's that to also watch out for. In terms of strengths and weaknesses for FX, we have the high beta currencies lagging, and then we have safe haven currencies leading. AUD's weak, we have NZD weak, we have CAD also weak on the back of weaker oil prices, and then on the other hand, we have strength in the likes of CHF, the likes of JPY, even Euro enjoying strength as well, right? Of all of them, right, I highlighted AUD JPY as one to be very interested in, or want to just look out for. And I'll just quickly show you what I'm saying, and then we can move on from there. Right now, we've seen solid downside push in today's session already, right? Already down about 85 pips already, down about 85 pips already on this day, down about 0.55% already on the day. But if you still want to look out for this, I mean, there could be a pullback towards, because as long as equities keep being lower, oil prices being lower, risk sentiment keeps being negative, you expect further downside for the likes of AUD, JPY. If you look at levels like this, right, previous supports going back to the lows of 14th of January as well as 18th of January, similarly on the 19th of January. Now we've cleared out a level. We could get a retest, although this is one that's also interesting, round number, key one around 82.00, also supports 2 on the pivot point that I have on my chart here, also served as resistance already, even in Asia. So this either here or here, anything back into this region, which we're already seeing, could provide opportunity for further downside on this particular asset, right? We could look at this and then obviously put an eye on this. If you're going to look at a target level, obviously we've moved much already in today's session, but if you can move back into that region, maybe anything back towards this round number, right? Although with Friday, with profit taking, all that in risk, I mean, that might be excessive, but it's the next key level that I want to also be watching out for in terms of resistance as well as support. Apart from this, we can also look at CAD JPY. CAD JPY also an interesting one to look out for as well, right? Key level to watch out for in this particular one has also been this key. Let me just look at this. All right, now we're back retesting this key 91.00 level, right? Also a key round number around that level. You can see previous support going back to the 7th of January, as well as 11th of January. Very messy one here, but now we're back retesting that level. That could be interesting. Better still if we can get a deeper pullback towards yesterday's lows as well as Tuesday's lows as well. That could also be another interesting one to look out for. Anything back to this region or even from here, we could see further downside on this particular one. But with all of this said, I'm still not really out profit taking. I'm still not, overly, excited about jumping into them, especially on a Friday like this, just before the week where we have the FOMC meeting. So there's that to also watch out for. But these are, the currency pairs I have in my mind, key in terms of technicals, and I'm paying attention to. On the calendar, it's a light one in the day ahead, except ECB President Lagarde on the wires, right? That'll be interesting to listen to what she has to say, right? Apart from that, we have retail sales for Canada, right? Also in the week ahead, although the numbers are expected to come in weaker than prior print. But apart from that, we're going to keep a very close eye on sentiment, see how it plays out for the day. Keep a close eye on equities, on oil, on VIX, as well as the bond market as yields, and then see how that plays out. If risk off continues to exacerbate, we expect the likes of the Kiwi, the likes of Aussie to suffer, even the likes of CAD to suffer against the safe havens like JPY, CHF especially, right, in the session ahead. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask, and we'll always, do our best to help. Thank you. Do enjoy the rest of your trading session. Goodbye for now.